Hello, what's up, YouTube family? It's been a while since we last discussed, but today I'm here with another video. Yeah, so in this video, I'll be sharing with you this strategy that got me funded on FTMO. Yeah, the good news, it is an easy strategy, and it's good for those that are struggling with trading psychology. Yeah. So basically, in this strategy, there are three things you look out for, and I'm going to talk about the three things. So the number one thing we look for dive. We are going to use an indicator called awesome oscillator. It's denoted as AO. So from trading view, you will come to indicators and type in awesome oscillator. So this is the indicator we use. So this indicator measures strength of a trend. If a trend is weakening, like in this case, we have the market going down, but we have the indicator printing a divergence. So at the point of where you see this, you know, this is the first thing we look out for. So we are going to use this indicator, awesome oscillator. Two, we are going to use a price action. We are going to look at structure. So structure, in this case, we are mainly looking at lower lows, like in this case, price printed this lower low, and so the trend breaking this, that means we are in a bearish trend, you know. Yeah, and lastly, we are going to talk about the entry. So the entry is based on demand zones. So let's look at an example. Uh, so in this case scenario, we have a divergence like here, and at the same point price is printing lower lows. So with this, it's a one time frame. It works on one time frame. I usually use the 1 hour or the 30 minutes. Either of the two works best. For higher time frames, you get one or two trades in a week. For instance, the H4, you might have one trade a week or even a month. Yeah, so the H1, you have a couple, like, 5 trades on all time frames in a week. So now, immediately you get divergency. It's our first thing we look out for, like in this case. So we got divergence. How do we get in? So we are not going to get in. Divergence only gives us direction. So at this point, we know the market is going down, but the indicator is telling us direction is to the upside. So now rule number two comes in, break of structure. So this was the last structure swing high, and we have a supply zone right here. Should price come here and continue lower, we are not taking this trade. So the number one thing we want to see is a break of this structure. So price nicely violated this swing high. So once price breaks that swing high, now rule number two has been fulfilled. We have a change in trend. So once we break this swing high, we have a change in trend, and we are now looking to take the trade. So our entry is going to be on a demand zone. So we ask ourselves, what was the demand zone that was responsible for the break of structure? So where was the demand zone before price broke structure? This was the area here, and that's where we take our entry. It's where we take our entry uh, with stops below the zone. So you can see it's a 10 pip stop. And targets, uh, targets to remove, to make it not subjective, you can go for a 1 to 2 always, and you are out for a 1 to 2. But you can as well look at, you can take at the last swing high, or you could look for another reversal point that could cause price to reverse. So taking targets here would also still be okay. So you could go for a strict 1 to 3 for all the trades you take, or you could look at, you know, resistance above the zone. Yeah. Yeah. So let's look at another example. Uh, we are going to look at now Australian dollar. So looking at this chart, maybe we use the 1 hour. I already had the last divergence. We can see that price is currently printing divergence at the moment, but we have not gotten a structure break. So we can see that price is printing divergence here, and we can, as soon as price breaks this swing high, we can look for a trade here. But the last working trade here, we didn't get divergence. This was convergence, but we can see here we got divergence. So this was the last trade on odd USD. uh One, we consider all the rules. We look at our indicator. Price was showing divergence to the upside and price was making lower lows. So this gives us direction that, okay, we are going to go to the upside at this point. Yeah, price was still at this point and the indicator was telling us we're going to go to the upside. So at this point, we don't take the trade yet. So we wait for a break of structure. So we have a zone here and the structure high is right here. So what we want price to violate this zone and equally break this swing high, which we did nicely. So at that point, we ask ourselves, which zone was responsible for the break of structure? So we can see this zone was the last zone before the break of structure. So at that point, we take our trade in this demand zone with stop loss below. It's a 7 pip trade, and we can have our take profit at this level of resistance. Yeah. So basically, uh, that's how I enter my trades. Yeah. So in a week, you can have like a few signals on all pairs, let's say 5 signals, but all of those can result into like 10 to 15% in a week. Yeah. If you like this video, comment in comment what you liked or what you would like me to throw more light on, and I'm going to leave a link in the Telegram group where you can ask your questions or hit me up and ask what you didn't get. I'll be willing to help. Yeah. Or something you'd like me to throw more light on. We could go over multiple examples, and yeah, hope you enjoyed this video, and please click the like button. It helps with the algorithm. Yeah, I'll be making more videos like this, more videos and more trades that I've taken within the week. Yeah, hope you enjoy.